Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of this crazy corporate world. And today we are diving into ETHZilla Corporation's filings. It looks like they're collecting some new hardware, and not the kind you play video games on. This filing might seem a bit dry at first glance, but it actually reveals a pretty interesting move by ETHZilla. They just acquired some major aircraft engines, and we're going to break down what that means for their business. Think of it as a behind the scenes look at a company making a significant equipment purchase. If you think getting easy to understand financial insights is valuable, make sure you hit that subscribe button. And hey, if you want to chat with us and other finance enthusiasts, join our Discord community linked down in the description. Alright, let's get straight to it. ETHZilla Corporation, a company we've seen before, has made a substantial acquisition. They've purchased two CFM 56-7 B-24 aircraft engines. Now, when you hear aircraft engines, you might think of an airline, but ETHZilla is not an airline. They operate as a registrant with the US Securities and Exchange Commission, which means they are publicly traded and have reporting obligations. This deal was made through a newly formed, wholly owned subsidiary called ETHZilla Aerospace LLC. So ETHZilla created a specific company just for this purchase. They bought these engines along with all associated parts, records, and stands. The total price tag for these engines was a hefty $12.2 million. This was paid in cash. After accounting for some deposits, and there were some adjustments that made the economic closing date actually back in September of the previous year, 2025. Now, the really interesting part is what ETHZilla plans to do with these engines. They are already subject to existing lease agreements with a major airline. This means ETHZilla essentially bought engines that are already generating income through leases. They also entered into a servicing agreement with Aero Engine Solutions Incorporated, who will act as the servicer. This servicer will manage the engines on ETHZilla's behalf while they are leased to the major airline. For this service, ETHZilla will pay a monthly fee. But here is where it gets even more strategic. The agreement has options for both ETHZilla and the servicer. ETHZilla has the right, but not the obligation, to have the servicer buy back either engine for a price of $3 million per engine after the current lease ends. Conversely, the servicer also has the right to require ETHZilla to sell the engines to them for $3 million per engine, again after the lease expires. Both of these options are contingent on the engines being in a specific condition. This structure suggests ETHZilla is making a calculated investment, potentially with a guaranteed income stream from the leases and then options for future buyouts or sales. It's like buying a rental property that's already occupied by a good tenant, with built-in exit strategies. This filing was signed by Mkandru Rudisil, the Chief Executive Officer of ETHZilla Corporation, on the 23rd of January 2026. Now, let's look at the bigger picture. This acquisition of aircraft engines is not just a simple purchase. It represents a strategic move into the aviation asset management space. By acquiring revenue-generating assets that are already under lease, ETHZilla is aiming for a predictable income stream. The dual options for purchase and sale with the servicer suggest a well-structured deal that allows for flexibility. ETHZilla is not locked into holding these assets indefinitely. They've essentially acquired an income-producing asset with a defined potential exit or further monetization strategy. What are the risks? Well, aircraft engines are complex and require specialized maintenance. While the servicer is managing them, ETHZilla is still exposed to potential issues with the condition of the engines, which could impact future sales or buyback options. Also, the airline industry itself can be volatile. If the lessee airline faces financial difficulties, it could impact lease payments. However, the company seems to have mitigated some of this risk by structuring the deal with clear options and involving a dedicated servicer. The price of $12.2 million for two major aircraft engines also seems reasonable given their operational status. So, what is our take on ETHZilla's direction here? This move appears to be a calculated step to diversify their investments into a tangible income-generating asset class. It shows a strategy focused on acquiring assets with predictable cash flows and predefined exit strategies, which is generally a sound approach in asset management. The key strength here is the immediate revenue generation from the existing leases. The opportunity lies in leveraging the servicing agreement and the buy-sell options to maximize returns over time. The main risk, as mentioned, is the dependency on the lessee's financial health and the engine's continued good condition, but that is somewhat buffered by the deal structure. Overall, this filing paints ETHZilla as a company making precise, strategic moves in asset acquisition, aiming for steady returns with built-in flexibility. A business that acquires income. Producing assets with defined exit plans is generally on a solid footing. Alright, that is our breakdown of ETHZilla's latest filing. What is your take on this engine acquisition and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.